Hello, everyone. Hello, hello. Happy, what's today? Tuesday. Happy Tuesday. Hope everyone's having a great day today. Super excited to be here for our Tip Tuesday, where I share with you a biz money tip, something about accounting or taxes or cash flow or payroll or how to make more money in your business. And today we're talking about a topic that might seem a little bit dry, admittedly, but is I think a really important topic, and that is the topic of S corporations. So before I go ahead and get started, let me know that y'all can hear me okay. Let me know who's here. Tell me who's watching, and go ahead and say hi in the comments. And we're going to go ahead and get started. I'm going to pull up our slides here because, of course, we have slides today with something like S corporations, which can be a little dry. I thought I'd throw in some slides to make it a little bit more fun. So, hey everyone, and let me know as you are watching if you have questions. I'm happy to answer those as we go along. So feel free to just go ahead and pop any questions that you may have in the comments. Okay, perfect. So let me get our slides up here, and we are going to go ahead and get started. This is actually a question I've been getting quite a bit. Hey, from Metro Atlanta, love it, love it. You'll have a big election coming up in a few, well, I guess a little over a month, right? So I feel like Georgia's on the brain. So awesome. Thanks for saying hi. Okay, so let's go ahead and get these slides up here. I can't walk and talk at the same time. So hold on. Let me focus on doing the slides first because I just can't do both. Oh my goodness. Okay. All right, here we go. What is an S-Corp and should I be one? So this is a question I actually get asked a lot. And I think there's a lot of confusion around S corporations. One, because like people really don't know about them unless you've actually done the research. It's not something you should know about, right? It's not something that people learn. So that's the first reason. And the second is because I think there's a lot of talk about S corporations, and a lot of people, it's a buzzword. People kind of throw it out there, like, what is it? Should I be one? But not a lot of folks really, I think, are delivering correct information about S corporations. So that's what we're hoping to do here today. So let me come over here to, nope, we're not ready for that yet. Come over here to our slides. Okay, perfect. Our slides are working. Again, if y'all have any questions, please put them in the comments. But today we're going to do just a quick overview of S corporations. This isn't going to be very long, so don't worry. We're going to talk about what they are, what the benefit of having an S corporation is, and then how to know when you should be one or if you should be one at all. So let's kick it off by first talking about what an S corporation actually is. And the full term is subchapter S corporation. We're going to refer to it as an S-Corp. That's what most people refer to it as. That's kind of the nickname for it, if you will. So the first thing to know about an S-Corp is that it's actually not a legal entity. This is one of the biggest, I think one of the biggest pieces of confusion is that people will talk about, well, I can be a C corporation, I can be an LLC, I can be a partnership, I can be an S corporation. An S corporation is not in and of itself a legal entity. So you're not going to go down to your, Secretary of State and say, I would like to register a business and I would like it to be an S corporation. That's not how that works. What you would do is you would go down and form a C corporation or a partnership or an LLC. Those are legal entity types, but an S corporation is not. An S corporation is a tax status. So this is, and it's the slide should say federal tax status. So this is a federal tax question or tax status that you can elect to be treated as. Now, you have to have a legal entity already in place to do this. So I, as an individual, can't just go to the IRS and say, hey, I'd like to be treated as an S corporation. You've got to have a legal entity already in place, and you actually have to have a corporation in place. So a C corporation or an LLC, a limited liability company in place. I, for example, I have an LLC. I could go elect S corporation status if I wanted to. So that's the first thing you really need to know is it's not a legal entity, it's a tax status. And the way you get it is I say you go to the IRS. You're not going to go to the IRS, but you're going to go on their website, you're going to get the form, and it's a form to elect to be treated as an S corporation for tax purposes. Okay, so that's what an S corporation is. So it's not its own legal entity. You're going to start with your C corporation or your LLC. And then you're going to elect to be classified as an S corporation if you so choose to do so. Now, the big question is, okay, well, why would I actually, that's in the next slide. Hold on. I forgot I was going to tell y'all how it's taxed first. This is important. Let's talk about this. So this is a question I get a lot is, okay, if I elect S-Corp status, is that going to change how my business is taxed? Now, most of y'all, I'm guessing, are either LLCs, I don't even need to guess, I know this, are LLCs or you're sole proprietors, meaning you are an individual running your business and you haven't, sole proprietor is the default status. It's not a legal entity, you just haven't done anything. Not in a bad way, but you just haven't done anything. So you're probably an LLC or a sole proprietor. So in your case, the way that you're taxed, if you're one of those two, is the profits and losses of your business do what we call flow up to your individual tax return. So for example, I'm an LLC, so my LLC has profits at the end of the year. I'm going to reflect those profits on my individual tax return, and it's on that individual tax return where I'm going to pay taxes on those profits. So the LLC itself doesn't file its own return. It doesn't pay taxes at the LLC level. Same thing with a sole proprietor. A sole proprietor, you're going to reflect your profits or losses from your business operations on your individual tax return. So an S corporation effectively is going to be the same, not in terms of what you pay in taxes. We're going to talk about that in a second, but effectively an S Corp is going to be the same in that it doesn't pay taxes at the entity level, meaning the S corporation itself isn't going to file a return where it pays taxes on its profits. The profits or losses of the S corporation flow through and up and are taxed on the shareholders' tax returns. That would be you as one of the owners, or maybe the only owner. It would be those profits would be subject to tax on your individual tax return. So very similar or really the same as an LLC or a sole proprietor. Now, an S corporation does have an information return. So just keep that in mind. There's a little bit more of an administrative burden there, but they're not paying taxes at the S corporation level. Hopefully that makes sense. Again, let me know if y'all have any questions as I go through this. Okay, so what are the benefits of an S corporation? Well, really there are a few benefits, but one of the main benefits, really the one we talk about, is that distributions to owners, so basically when you get money from your business, those are not subject to payroll or self-employment taxes once you've paid yourself a reasonable salary. So let's just back up a hot second, okay? So when you have an LLC or a sole proprietorship and you want to pay yourself as the owner, you're going to take what's called an owner's draw in those cases. If you've got an LLC or a sole proprietorship, you're not on payroll. You're probably not paying yourself as an employee because you don't need to be. That would be sort of silly. You're just going to take money, an owner's draw, when you need money. In those cases, remember we talked about how the sort of profits of the business roll up to your individual tax return, right? So in those cases, stick with me here, you don't pay taxes on the owner's draw, the money you take. What you pay taxes on are the profits of the business. So if I had $50,000 of profits this year, but I only paid myself, let's just say $30,000 in cash, the IRS doesn't care what I gave myself in cash. They care about those $50,000 of profits. And that's what I'm going to pay income taxes on. Now, I'm also going to have to pay what's called self-employment taxes on that $50,000. And it's 15.3%. So self-employment, you do get a deduction for half of those, but self-employment taxes, right? And self-employment taxes exist because if you think back, if you ever were an employee of a company and you get a paycheck, on your paycheck, it would show that you had payroll taxes taken out of your paycheck, right? Those payroll taxes got paid up to the IRS, and they represented your share of the required payroll taxes, so the employee payroll taxes. The business also had to pay payroll taxes, the employer's share of payroll taxes, and together those added up to the 15.3%. So when it's your own business, you have to pay the employee and the employer portion of the payroll taxes, that 15.3%. But much like your employer, if you were an employee before, they would have received a deduction, a tax deduction for those taxes they paid on your behalf. You get that as well. That's why I said it's the 15.3, but you do get a 50% deduction. Now, those are taxes that you pay when you're an LLC or you're a sole proprietor and you've got profits, self-employment taxes. Let's just say you are on payroll, right? So let's say you decide to become an S corporation, or you have a C corporation and you put yourself on payroll, meaning you're paying yourself a salary, you get a paycheck, taxes are taken out. there are payroll taxes, right, that are taken out of those funds that are paid to you, much like they would have been if you worked for someone else. So the benefit of being an S corporation is once you've paid yourself a reasonable salary, and we'll talk about what that means in a second, once you've paid yourself a reasonable salary, any amount above that reasonable salary that you distribute to yourself is not going to be subject to any kind of payroll or self-employment taxes. Essentially, it's treated as distribution of profits versus compensation for services, if that makes sense, okay? So that's the biggest benefit of an S corporation. So, and actually I do have an example, so I was going to give you one, but let's wait a hot second and we'll get there in a minute. So that's really the big reason why to be an S corporation. I was going to say something else and I forgot what I was going to say. Again, let me know if y'all have questions in the comments. So before we get to the example, I just want to talk real quick about who can actually be an S corporation. Now, I want to caveat this by saying that most of you watching, this isn't going to be an issue for, but I do still feel obligated. I want to get the right information out there to let you know what the rules are, okay? So, and there are a few requirements for who can be an S corporation. An S corporation has to be a domestic corporation, so it can't be a foreign corporation. It's got to be registered here in the United States. Excuse me. It has to have 100 shareholders or less. Again, probably not a problem for you, but keeping that in mind, if you do happen to have a business where you do have a lot of investors and you think you might breach that 100 shareholder limit at some point. The shareholders of the business have to be either individuals, certain types of trusts or estates, or certain tax-exempt organizations. So basically, and this leads into that last bullet point, they cannot be partnerships, they cannot be corporations, and they can't be non-resident aliens, meaning foreign people. Okay, so they've got to be individuals, and then, it's usually individuals, and then there are a few options for trusts, estates, and tax-exempt entities. That can be shareholders as well. But for the most part, it's going to be individuals. So 100 shareholders or less, typically individuals, they've got to be, they can't be foreign, they've got to be US, and the company itself has to be a domestic corporation. Make sense? Again, probably not going to apply to most of you, but I did just want to point those out. So then this question comes up of, okay, well, when should I elect S corporation status? Like, okay, great. And actually, you know what? Before we talk about this, I'm going to go a little out of order on my slides because I want to show you all the example first. I want to really dig into the benefit of the S Corp so you really understand why this is a benefit before we talk about whether or not you should even be an S Corp, or when to be an S Corp. So here's the example, and I think I actually did this based on last year's tax rate. So the numbers would be a little different if you did them this year for 2020. But in the left column, you've got sole proprietor, right? So this is our left column here. So sole proprietor, again, and this would be the same for an LLC. So if you're an LLC, this would be your example. So if we had $75,000 in revenues and we had $40,000 in operating expenses, that would bring us down to taxable income or profits of $35,000. Now, the reason there's nothing here for owner's salary is because in the case that you're an LLC or you're a sole proprietor, you're not on salary. You may take money from the company to pay your bills, and that's fine, but you're not on salary. That's why this is zero here. And similarly, why it's zero for payroll taxes, because you're not on salary, so you're not paying payroll taxes. So in this case, your profit is $35,000. The math adds up to that being just under $5,000 of self-employment tax. And we're just comparing the payroll taxes here. We're not talking about income tax. So you'd also pay income tax on the $35,000, okay? But you're going to pay the $49.45 in essentially payroll taxes or self-employment taxes if you're a sole proprietor or an LLC. Now, if you opted to become an S corporation, same revenue, same operating expenses. But now let's say you pay yourself a reasonable salary. And let's just say that for this example, a reasonable salary is $25,000. So there's your salary right there. On $25,000, you'll pay about $23.47 in payroll taxes, okay? And that brings your taxable income down to just over $7,500. So very different taxable incomes because you've paid this owner's salary out here. The employee payroll tax portion is $19.13. And so that brings your total payroll taxes to $42.60. Now, this is not a huge difference. $49.45 to $42.60, not a huge difference. Because here we're really just talking about $75,000 in revenues. But imagine if this was $750,000 in revenues. You'd have a much bigger divide between that sole proprietor or LLC and that S corporation. And so, as you might have already figured out, the higher up your revenues and actually really your profits you go, the more advantageous it is to become an S corporation, because the more profits you have to distribute, the more money you have to save by not paying payroll or self-employment taxes. Does that make sense? So in this situation, where the owner is getting the $25,000 in salary, and they're only paying $4,260 in payroll taxes, whatever remaining funds exist, because they had 35 grand left over, right? They had 35,000 after they paid their business expenses, and then minus the 25,000 for payroll. All of that money left over can be distributed to the owners, not income tax free, but self-employment and payroll tax free. So that's the big benefit right there. Now, I want to go back real fast and look at this slide. When should you be an S corporation? Because this is really the key question. Once people understand what one is, then it's the question of, well, when do I actually do this, right? So a couple of questions to ask yourself. The first question, and again, this question may not be an issue for most of you, but the first question is, would S corporation status limit your long-term plan? So this is where I want you to kind of put on that strategic hat and think long-term, what am I trying to do with my business? So the first aspect of this is that S corporation status can limit who can invest, right? Because remember, it's got to be domestic persons, essentially. You can't have corporations or partnerships as investors. So if that was part of your plan, if you were going to open this up to a wide range of shareholders, some who might be foreign, some who might be corporations or partnerships, then the S corporation status would really would actually eliminate your ability to do that. Also, you want to, and this is not something we've talked about before, but with an S corporation, unlike an LLC, the allocation of profits and losses is automatic based on the ownership percentage. So if you own 50% and someone else owns 50%, those profits and losses are automatically going to be distributed based on the 50-50. Whereas in something like an LLC, they get distributed based on the agreement. So keeping that in mind as well. And then lastly, with S corporations, you're limited to only one class of stock. Again, probably not a big deal for most of you watching, but something to keep in mind if your plan is ultimately to open up your company to other investors. If you want to have that flexibility, then maybe an S corporation is not the right option for you. The second question to ask yourself is, are you prepared for the additional administrative burden and costs? So being an S corporation is slightly more complicated than being an LLC without S-Corp status or being a sole proprietor. It's not terribly complicated, but it's going to be a little bit more work, a little bit more cost for a couple of reasons. Number one, the first is owner salary. So we talked about reasonable salary, and I am going to answer the question of what is a reasonable salary. But in an S corporation, you do have to pay the reasonable salary. So making sure you factor that in, that you actually have the money to do that. Now, typically, you're not going to want to consider becoming an S corporation until you actually have the money to pay yourself anyway. So usually this isn't an issue, but keep that in mind, that you have to pay that reasonable salary before you recognize any of the benefits of an S corporation. So if you can't do that right now, an S corporation doesn't make sense for you at this moment. The second is tax prep fees. So I mentioned there's an information return. Things get a little bit more complicated than with an LLC or a sole proprietorship. So just keep that in mind. Not a huge number probably, but it is an additional cost. Also, along with that, payroll processing fees. Again, you're going to be going from paying yourself an owner's draw where you just cut yourself a check or transfer some money to actually putting yourself on payroll where you're where you're paying yourself on a regular basis. And oftentimes that involves having a payroll processing software, which is helpful in paying those payroll taxes to the government. So again, not a huge fee, but something to keep in mind. And then lastly, any legal filing or compliance fees. So if you're currently a sole proprietor, for example, you're going to need to go ahead and form a C corporation or form an LLC before you become the S corporation. So keeping in mind fees associated with that. And it's not typically not just upfront fees of getting a lawyer and having documents drafted and actually filing, but also typically ongoing. For example, here in Massachusetts with my LLC, every single year I have to file an annual report. And I forget the exact cost, but I think it's about $500. So it's, again, not a huge amount of money, but something to keep in mind. And these all can certainly add up. And then the last, and this is kind of the big sort of $1 million question or whatever, although that's not the right answer, to when should I be an S-Corp, which is what is your taxable income? What are your profits? And this is really the key question, because again, the benefit of an S corporation is that you save payroll / self-employment taxes on profits you distribute to the owners above a reasonable salary. So if your business is at a loss, or if you have very small profits, an S corporation probably does not make sense for you right now, because you need to have profits that at least exceed what a reasonable salary is that you would pay to the owners, okay? So in my example, a reasonable salary was 25 grand. The profits were 35 grand. So there was enough, the profits were more than the reasonable salary, but not by a ton. I'm not sure I would go form an S corporation for a $700 savings every year, because I know I'm going to have to pay, probably more for my tax prep. I know there's going to be more administrative burden. So for that kind of savings, probably not. But again, if I had 750,000 in revenues, and let's just say 350,000 in profits, and my reasonable salary was 25 grand, then yeah, I'm going to form an S corp, because that's that's $275,000 of profits that can be distributed without being subject to payroll or self-employment taxes. So this is really the key question to be asking once you get over the other ones. Now, again, I want to reiterate, we're talking about taxable income, not gross revenue. So if you say I had sales of $100,000 in my business this year, that's not what we're talking about. We're talking about what is your ultimate profit. So again, keep that in mind. The second thing to point out is there is no right amount. And this is the thing that frustrates people the most. And a lot of CPAs, some will say 75 grand, some will say 50, some will say 100. I've heard answers kind of all in that ballpark. At the end of the day, there is no right amount, and it really comes down to where your business is at and where you think it's going to go. So let's talk real fast about that reasonable salary thing. Now, how do you determine a reasonable salary? Well, fun for all of us, there is no right answer to this. The IRS hasn't come out and said, this is exactly how you do it, which is super frustrating. But in their defense, it would also be really hard for them to give a very specific answer. Because at the end of the day, what a reasonable salary for you is really depends on your business. It depends on your industry. It depends on what you're doing, what services you're providing. So the way we figure out reasonable salary is we look at all of those things. We look at the business, we look at the industry, we look at what I'm doing, for example, in my business, what services I'm providing. And we look at what would I make if I did this work for another company within my industry and kind of at my level. And that's how you kind of figure out this reasonable salary amount. So again, it can be wildly different depending on what industry you're in. And that's why there's no right amount. But once you've sort of figured out this feels like the right reasonable salary, or I shouldn't say the right, but feels like a justifiable, defensible, reasonable salary, then you want to make sure your taxable income is above that. Now, again, it's not just is it more, but is it significantly more? And the other question I would ask too is it continuing to grow? So, and for what it's worth, your business should always be growing, ideally. But let's just say you were in a spot where a reasonable salary was $50,000 and your profits this year were 52, and you really weren't trying to grow the business, and you really or I shouldn't say 52, let's say 60. So reasonable salary of 50, profits of 60. So you've got a 10K cushion there, right? But you don't really envision the business growing much beyond that. I'm not so sure I would elect S-Corp status in that case for $10,000 of profits, the savings of which would be somewhere around, doing some like super quick math, like, I don't know, oh my gosh, like $1,000 probably, give or take, right? So I probably know, if I knew my business wasn't really going to grow much beyond that, I probably wouldn't waste my time for that savings every single year. However, if my reasonable salary was 50K and my business was currently at 60 of profits, but I planned to, see 50% growth every single year, then yeah, maybe I am going to go for that S-Corp, because maybe this year it's not the biggest savings, but I know we're going to keep growing and growing and growing and growing, and it's going to continue to be worth more and more and more. Now, I didn't get into the nitty-gritty in this live about exactly when you file and all the rules about that. But when it comes to an S-Corp, there is a period within which you have to file. It's within 2.5 months of the beginning of the year in which you want to be treated as the S-Corp. So for example, if you are a calendar basis taxpayer, which most of us probably are, meaning your year runs from January 1st through December 31st, if you want to be treated as an S corporation starting, let's say starting in 2021, then you would need to file by March 15th in order to do that. Make sense? So the reason I say that, a couple of reasons. Number one, if you have the example, let's say it's the example where your salary is 50K and you think your profits are going to be 60K, maybe you don't file for S-Corp status this year. Maybe you do that sort of analysis and thought process and say, I think I want to be an S-Corp, but I'm not so sure it's worth it this year. And then maybe you plan on doing it the following year when your profit spread is going to be even bigger. The other thing is, you don't necessarily have to do it January 1st, right? So maybe you're thinking, 2020 has been a wild year. I have no clue what's going to happen in 2021. I don't know if it's going to be worth it or not. I'm still trying to figure stuff out. Let me see how it goes. You can monitor January and February and file in early March. And if January and February are going great and you're hitting your goals and you're like, wow, I really am going to hit the point where I've got enough profits to make this worth it, great, go ahead and file. But if January and February you're kind of struggling to get where you want to be, or something happens, whatever it may be, then maybe you pass on it for this year. So you've got some wiggle room there, but you do have to do that filing by March 15th. So you do want to, you can't decide in October, hey, I've had a banner year, I want to save money on my taxes, let me go ahead and file S-Corp status. It doesn't work that way, unfortunately. So once you're an S-Corp, you're an S-Corp. You can obviously apply to have that status revoked, but it's not like you can turn it on and off every year. So keep that in mind as well. Okay, so I think that covers everything. Hold on, let's go back to and we saw our example, so I'm not going to go over the example again. Anyone have questions? Feel free to drop your questions in the comments. We're going to do I think this is our last slide. Yep, our last slide, and then we'll wrap it up. So why would you not want to be an S-Corp? I get asked this question a lot as well. Like, okay, this all sounds great. Why wouldn't I want to be one? What am I missing? What's the catch? So the first reason, really, I think probably the biggest reason for all of us is that there is a higher administrative burden, and that could be time and it could be cost. Because again, you may have to hire a CPA, you may have to do a little bit more tax prep because there is an information return. You may have costs because you have to go form the legal entity, or because you have to pay the ongoing annual costs of having that legal entity. You've got to pay for the payroll software and have somebody manage that so it doesn't get screwed up in the payroll tax filings. So a bit of an administrative burden that you're not going to see with an LLC or sole proprietorship. Again, it's not insurmountable by any means, but it is something to keep in mind. That's why you want to make sure you've got enough profits to result in enough savings to make this worth it. The second, excuse me, hold on. The second reason you may not want to be an S-Corp, and I hate having this on here because I don't think this is the reason not to be an S-Corp if everything else adds up. It's more just like a heads up, is that the IRS may actually scrutinize your payroll and owner distributions more, because there is that tax benefit of any profits distributed to owners above the reasonable salary not being subject to payroll taxes. That's tax benefit. The IRS has their eye on S corporations because, I'm sure not surprising to you all, a lot of people have tried to use S corporations to avoid paying taxes. And so the reasonable salary is where a lot of people end up getting nabbed. You'll have somebody whose reasonable salary should probably be $250K trying to pass off a $50,000 salary, so that everything above that $50K avoids payroll taxes. So the IRS may scrutinize that stuff a bit more. Now, the thing I always say is, and again, remember, there's no right answer when it comes to reasonable salary, is just document everything. When you sit down and analyze your reasonable or determine your reasonable salary amount, document the process. Document exactly why you chose the number you did, and then review that number on an annual basis so that if you ever do get audited, you may still be wrong and the IRS still may say we disagree with you, but they may waive penalties if you can say, look, this is why I chose this number, and you substantiate that process and basically show them that there was no no fraudulent intent, that you believed that number to be an accurate and fair number, and they just happen to disagree with you. And then the last reason not to be an S-Corp, and we've talked about this one already, is that there are limitations on who can invest in the company. So if your goal is to take this company public, if your goal is to bring in tons of shareholders above the 100-person cap, or tons of shareholders that are corporations or like if you want to bring in venture capital funds, anything like that, an S-Corp isn't necessarily going to be the right option for you. I say necessarily because, and this is the part I'm not going to get into today, but you can always decide to revoke your S corporation status in the future. And a lot of times people will do that when they want to go into deals and bring on other shareholders. But there are some complications there. There are some potential downsides there. Not going to talk about that today. So again, why would you not want to be an S corp? Because of those limitations, something to consider. But for most of you, I think the key piece here is going to be that higher administrative burden. And again, it's not a huge amount. It's not a huge amount of time, but it is something to make sure you're prepared for before you decide to become an S-Corp. So I hope that was helpful. Let me know if y'all have any questions in the comments. Happy to answer them. I'm also going to go ahead and pop in. Let me actually do this right now. I wasn't going to do this, but let me pop in the link right now to the form. Actually, I'm going to pop in the page on the IRS website that really just kind of goes over basically what I just said, but also gives you the form. And so I can't walk and talk at the same time. Hold on. Okay, so I just popped in that one. And let me also pop in the form. Oh my goodness. That if you want to become an S-Corp, this is the form that you would use. Yes. Okay. So form to file for the election. I just popped that in as well. So that's the form you'd use. It's not terribly complicated. You do need to read through it very carefully. There are some important choices that you have to make on there, so you don't want to screw it up. This is the kind of thing I would recommend, having your CPA do for you. This isn't necessarily something you want to tackle on your own, but the form is there for you. So, all right, I don't see any questions, so I am going to leave it there. And let me go ahead and stop my screen. Just as a reminder, I do this every single Tuesday on a different biz money topic. I don't know what we have scheduled for next week off the top of my head, but we will be back here with something fun then, I'm sure. And as a reminder, I am offering my biz money bundle, which is really, it's everything I use in my business to manage the money stuff. So it's my cash flow tracker, it's my budget template, it's my profit calculator, and I think most importantly, it's my quarterly tax calculator, which you basically plug in some numbers and it's gonna tell you what you owe in quarterly taxes. So you can grab that by going to megkwheeler.com/bundle. You're so welcome. Thanks so much for being here. And I will see you all next week for another Tip Tuesday. Bye for now.